So our panel today is about Africa's capital market investment climate. And we're very honored here to have key African regulators to be able to address pivotal issues about their countries. We're going to start with the Deputy Managing Director for the Ghana Stock Exchange, Ikao Idezi. Evezi. And my question for you is that there are, of course, very exciting times for Ghana with its resource finds, Eurobond program, and infrastructure investment plans. How do you read the capital market environment in Ghana in this respect, and what opportunities do you see for institutional investors in your country?
Thank you very much, Barbara. You didn't even give us a minute to catch some breath. You just started with a question. But greetings from Ghana. Ghana, you all know, is a land of peace and prosperity. And we bring you the greetings, and our president will be with you lunchtime to also share with you the kind of prosperity that is going to come up in Ghana. I say Ghana is a land of peace and prosperity for good reasons. And that's why Barbara talked about the exciting times. The first thing is the fact that in 2012, Ghana once again went through peaceful elections. We had the loser, the biggest opposition, petitioning, went to court. We went through it also peacefully. The court affirmed the presidency of Honorable Excellency Mahama. So once again, Ghana passed the test when all nations were looking at Ghana, wondering what was going to happen to Ghana. Ghana, the showcase of Africa. But we went through it. So it's a land of peace. In terms of prosperity, she talked about the new natural resource finds. We found oil. Gradually, we're growing it. We'll be hitting over 100 barrels from next year going. The economy is quite stable and growing. We had the highest GDP growth, one of the highest last year, over 8%. If you take the last 3 to 5 years, it's average over 7%. So it's quite a growing economy. Inflation has been tamed. It is about 11.5 now, but it was single digit until end of last year. Currency is fairly stable. And with all this, Ghana has become one of the most attractive investment destinations you can find in sub-Saharan Africa. And with the political stability and also the growing economy, the capital market is also developing. So it's also creating opportunities for investors to invest in Ghana in terms of portfolio investments. Ghana's capital market is about $28 billion US market cap. If you look at it from domestic market cap, that's about $7 billion. It is a very well-regulated market with the Securities and Exchange Commission as the apex regulatory body. For today, we have the Director General of the Securities and Exchange Commission sitting right amongst us. All our processes are electronic, seamless from trading to clearing settlement to depository. We have a wide range of products, and that is also widening or expanding. We have the normal shares or stocks being traded. We have government bonds also being traded. We can trade corporate bonds. And we just added ETFs, exchange-traded funds, to the list of products we can trade. In terms of foreign investors coming to Ghana, there are no restrictions in terms of the holdings. You can buy up to as much as 75%. We have a policy of a public float of 25%. So you can go above 75% if you take the public floats into consideration. You can have free transferability of your dividends and capital gains, etc., out of Ghana without problems. No capital gains tax for the next 4 years. No stamp duty. So Ghana's market is quite attractive. The juicy part of the story is that for this year, Ghana's market is the market to beat. The market has gone up 67% in terms of index performance. I don't think any market can beat that. If you want to beat that, then you must be doing maybe 70 or over. Market activity has gone up. We've had values of traded doubling. We've had volumes also doubling on the market. And all these things are being derived from the fact that we've had a stable economy which is growing, and also political stability. In terms of some of the key developments that have happened in the last year and also this year, we had Tullow Oil, which is one of the oil-producing companies listed on our market. We've listed exchange-traded funds, like I said. We've also had the pension funds reforms, which is also driving the capital market as we speak. The government has also taken the lead in setting the agenda for the development of the bond market. So we've had the government also looking at issuing long-dated bonds to serve as benchmarks for the private sector to get in. So the government of Ghana has started issuing 7-year bonds. They'll be issuing 10-year very soon. So the bond market is also being looked at. We're also making sure that we can develop the corporate bond market. So these are some of the key developments that have happened in Ghana so far. In going forward, and also what are the opportunities for institutional investors especially? One, the corporate bond market and the government bond market will be developed. We're going to have more bonds being issued in the coming years, especially for infrastructure. We're going to get some quasi-government institutions also going out there and raising money by doing bond issues. We'll have a few IPOs between this year and next year, so that'll be creating some investment opportunities for institutional investors. We're also going to introduce new products on the market. We're going to have some derivatives being introduced, especially derivatives based on the index and also maybe based on commodities on the market. Then the final part is that West African stock markets have decided to integrate, and we've gone very far. My colleague sitting by me is one of the key members of the team from BRVM, and we are deciding that we're going to create a larger market, harmonize all our rules, and make sure that market operators can operate in all the jurisdictions that we have, and also potential issuers can also raise capital across the region. It's a region of about 250 million people, a huge market, and that is what we are trying to do for integration so that we can create a bigger platform for institutional investors. I'll end by saying that Ghana is still a very attractive investment destination. The economy is growing. We still have stability, and you can trust that when you invest in Ghana, you will never regret it. Thank you very much.
I want to thank you very much, but I also want to ask you how I can invest and get 67% return. Stunning, absolutely stunning. We congratulate you. And as you know, I'm not Aruma. Aruma is here. We started off, someone introduced me as Hubert. So I'm going to hand it over to her. Thank you.
Thank you very much. And sorry I joined the panel a bit late. I think we'll just continue. And I caught a bit of what the Deputy CEO of the Ghanaian Stock Exchange said, and I do agree that I will certainly invest in Ghana. I think it's a good time to ask Ado, the Chief Executive Officer and Director General of BRVM. I call him the hunter turned, the poacher turned hunter. Yes. Please, I would like to hear from you about how the BRVM is doing, but also about regional integration, which I believe the Deputy CEO of the Ghanaian Stock Exchange started to talk about. As a market based on regional integration, tell us about the plans and strategy for the BRVM and how investors can access these opportunities. Thank you.
Thank you very much, Mrs. Chair. As you said, the Regional Stock Exchange of the West African Monetary Union, the BRVM, is a part of the economic and financial integration in our region. The BRVM was created in 1996, and it is a full integrated capital market with a cutting-edge technology. Since its creation, our stock market has played a key role as a modern financial instrument in mobilizing long-term resources in the 8 countries, members. The 8 countries members are Benin, Burkina Faso, Côte d'Ivoire, Guinea-Bissau, Mali, Niger, Senegal, and Togo. The West African Monetary Union economy are doing very well, as the average economic growth is about 5%, with some countries like Côte d'Ivoire that recorded 9.8% and Niger 12.7%. With 37 listed companies, the market capitalization recorded a significant increase during the last years to reach more than $10 billion in June. The market indexes has doubled in 15 years, and the P ratio of most of the listed companies is less than 12. We also have a very active bond market with more than 30 listed bonds issued by government, regional, and international financial institutions and private companies. The BRVM stands at the 6th place of the African stock exchanges in terms of domestic market capitalization. Despite of this achievement, the biggest challenges of our stock market are liquidity and attractiveness. The strategy we put in place to mitigate these challenges are to boost both the supply and the demand of securities in the next years. One of these strategies is to encourage the listing of new companies, particularly banks, insurance companies, telecommunication and mining companies with incentive by the government. We also encourage listing of companies to increase their free float or to split their share price to make them affordable for investors. This year we create many investment clubs in some countries, and we are working on the development of new products to attract retail investors in our market. To support this development, we have initiated a number of projects also, and I can mention we moved to a continuous trading last week. We will open in 2014 a third board for small and medium-sized enterprises as well as growth companies. We are encouraging brokers to develop research activities for listed companies. And finally, we are working on an easy access and wide dissemination of information on listed companies in English for international investors. I think that the BRVM offers a unique opportunity to regional and international investors to invest in 8 countries from one single stock exchange. As my friend Eko mentioned it is a unique model, and we are working to extend it to the other stock exchanges of the ECOWAS to have a bigger marketplace to boost economic growth in West Africa. Thank you.
A really great example of regional integration. Well done to you and your colleagues. I think we'll move from West Africa to Zimbabwe. And Alban, in your opening remarks, I'd like you to tell us about the Zimbabwean Stock Exchange. I remember Econet being covered by the Wall Street Journal many years ago, and I think it drew attention to the Zimbabwe Stock Exchange. I think given some of the politics and issues around Zimbabwe, I think it's a great time to tell us about the exchange, your plans, and what advice you have for global investors as they access the Zimbabwean market.
Thank you, Chair. Zimbabwe is one of the most lively countries in the world. And I'm sure you are aware of us, and I would like to start. We also have the oldest exchange, or most likely nearly the oldest exchange in Africa, having started in 1896. But unfortunately, we also have the oldest systems in terms of manual systems, in terms of trading. Those are the issues I'll talk through in my presentation. But to just give you our background in terms of the structure of the capital markets, because we are sort of new in other ways. We've got the Securities Commission being on the apex of our regulatory issues. having started in 2009. So it was, although we started in 1896, the regulator only came in 2009, which is very odd in most people's minds. We've also got custodians, international custodians, Standard Chartered, Stanbic, which is Standard Bank from South Africa. We've got local custodians, ZB and Old Mutual. We've also just started having a Central Securities Depository Company to start the automation process, which I'll talk about a bit later. Now, in terms of the stock exchange itself, the Zimbabwe Stock Exchange has got 69 listed companies. It's in the top, I'll say top 6 in terms of number of listed companies, although its market capitalization is far lower. We're talking about 4.96 billion as it yesterday. The highest has been 6 billion, and we're only talking about the domestic market capitalization. We've got 45 individual members of our stock exchange, but in terms of trading, we've got 14 firms which are members of the stock exchange. We have, over the past year, delisted 10 companies because of issues of meeting continuing obligations. We're very strict. We've started to be strict. We want to make sure our investors, as they come in, they look at us at international level. So we're strict with our listings, and hence we've actually reduced them. You might think I might be losing my job in reducing listings, but the whole aim is to have a quality listing and then grow from there. So I'm excited about the growth potential on that. But let me just talk through the major issues we are going to be doing, the update on the stock exchange. As I've said, we are manual, and that's a major negative aspect of our stock exchange. But you can look at it differently in the sense that although we are manual, we still trade about 1 million shares, $1 million US worth of shares on a daily basis. So can you imagine when we are now automated? We'll just go through the roof. In terms of automation, our aim is we should be automated by the end of first quarter next year. We've got a consultant already on board who's working with us in terms of actually getting vendors to put in their own bids. And in October, we hope by that time we'll have bids from various vendors for the supply of the automated trading platform. As you know, as I've said earlier, the CDS itself is already on the ground, and by end of October, we expect the CDS to be working. So when we will then interface next year so that we've got a completely automated system which is seamless. Now, coming back to ownership of the stock exchange, we are moving away from being a mutual society into a shareholder-owned company. So that's demutualization. We're in that process, and we hope by the end of November that process will be through. In terms of listings, it's a major project we are undertaking. The last time we looked at our rules was in 2002. We're now doing a whole revision on that, so that we have got new listings. We're benchmarking against what we've done in SADC, what's happening in other countries. So we're also internationally benchmarking our listing rules so that we're at international standards. I think I'm running out of time, but quickly on the...
Yeah, it'll be nice to get some interaction with the audience.
All right.
And we're not getting more time, even though your chair showed up a little late, so.
Okay, that's all right. I'll wait for questions then.
Okay. Very proud of the things that you're doing, and I think there needs to be much more visibility. As an apex regulator myself, when I hear that you're delisting companies that are not meeting your requirements, I think it's important for the integrity of the market. I do want us to have some time to interact with everyone who's here, given the quality of the of the audience as well. You've heard from Ghana. You said it was 67% year to date. You've heard from the BRVM, which is a great example of regional integration at the level of exchanges. And you've heard from Zimbabwe in terms of just rebuilding an exchange that's one of the oldest exchanges in Africa, if not the oldest. I don't know which, between you and South Africa, which one is older?
I think we
yours
debate
probably-
between South Africa, Egypt, and ourselves. So I would say it's us.
Okay, okay. So I'd like to open it up for comments or questions, but please keep it short so that we can get as many people as possible in. And I'd like to get an opportunity at the end to summarize what I've heard and also just share a few thoughts myself. Yes, sir, in the back. Please introduce yourself and then.
Great, don't have to shout. Terry Tamminen with Pegasus Capital Advisors. You have addressed some of the issues and challenges related to regulating stocks and publicly traded entities. I wonder if you could also just briefly address the regulatory framework around private equity investing and other kinds of companies that are moving into the public sector.
Okay. I think we'll take a few, and I'll have the comments from each of my panelists. Yes, sir, in the middle.
Thank you. David Meachin, Cross Border Enterprises. You talk about liquidity, and obviously that's always a challenge in a lot of emerging markets. To what extent are you encouraging research of these various stocks that you are trading? Because from my experience as an investment banker in the US and having done business in Africa, the question of getting information out about the companies so that people take an interest and have the ability to have the liquidity is, in my view, very important. So I'd be very interested in your views.
Any more comments or questions? Yes, madam.
Courtney Fellows with African Alliance Securities here in the U.S. My question is this: what kinds of incentives do your governments give to companies to encourage them to list on the exchanges? Are there tax breaks, et cetera? Thank you.
And I think there was someone else from here. Yes, sir.
Hi, my name is Frankel Badoussi, and my question is both for Sir from Ghana and from BRVM. You talk about liquidity, so I want to know if foreign capitals inflow or outflow make your market more volatile or less volatile. So I want to know how you manage that.
Sorry, does liquidity make your market more volatile or less volatile?
Yeah.
Okay.
Do the foreign capitals inflow and outflow?
Okay. Okay, thank you. I think you have a good group of questions, and why don't we start with the Deputy CEO of the Stock Exchange. The regulatory framework for private equity, I think it's a comment that would be useful for each one of you to make, respond to. Research, I know BRVM had already made a comment about the value of research, and then incentives that you have for encouraging companies to list. And finally, does liquidity cause volatility in your stock price?
The first one is
yes.
private equity.
Private equity, the regulatory framework for private equity.
The first question is quite interesting, the regulatory framework for private equity. I'm coming from a regulated market. The stock exchange deals with companies that have gone public and do public equity. When it comes to regulation of private equity, maybe my Director General of the SEC would like to chip in a word, but I don't think we have a regulatory framework as such for private companies doing private equity. By our company regulations in Ghana, if you want to do private equity, then you are restricted. You are restricted to the number of members that you can have or the number of holders, and that's 50. So you can't go more than 50. But when it's public, then you can open it up. The number does not really matter. So we normally regulate the public companies that are going public. We don't regulate private equities. Unless you decide to be a public company, but then you do a restricted offer. Restricted offer in the sense that you're restricting the number of holders. That then will have the regulatory framework for you, and you have to abide by our normal listing regulations and also abide by the continuing obligations as enshrined in the laws of the Securities and Exchange Commission. So that's my comment for the first one. Should I go on?
Yes, go ahead.
In terms of liquidity, whether it can make your market volatile or not, it depends on how your market is structured. For instance, when you take Ghana, we have just 34 companies. So already you have a limitation as to the number of shares floating out there, the number of companies out there. So in such a market, you can have liquidity really affecting volatility on this market. And if you look at Ghana's market over the years, I think you can easily tell how volatility has been playing on our market. This year, we find the market going up, everybody's buying. Pension fund is driving it for investors from about 60% of the market. They buy. Then when it comes to the point where people want to liquidate and move into others, then they have an issue. And that is why sometimes you can have those swings. But when you average it over the years, I think it's been quite good for Ghana. In terms of incentives for listed companies, we have a 3% tax rebate, corporate tax rebate, for companies that get onto the main board. And that also applies to a new market that we've just set up, which is an alternative market. And that is coming with its own incentives. The incentives that we've created for that market include the fact that we've reduced the requirements. You just need a minimum of 20 shareholders to be on that board. You need just 250 million Ghana cedis, 250,000 Ghana cedis, just about $150,000 a minimum stated capital to be there. You virtually pay no listing fees, $1,000 a year. That's the kind of incentive we've introduced for the alternative market. Then the other one is the fact that we set up what we call an SME listing support fund with support from African Development Bank to pay for the advisory costs for companies that will come onto this new market. And you pay back the money at the end of flotation. So that is a great incentive that we are introducing, and we are hoping that we'll get domestic companies especially to get onto this market. The last one I'll talk about is the liquidity issue and the research. I think you hit it right. Research is not very common in Africa. There are few research firms doing a lot of work on our markets. When you come to Ghana, I'm coming from Ghana, we have about 2-3 brokerage firms that are very serious about research. One is very famous around data bank. But then, when it comes to making sure listed companies provide information for investors to make informed decisions, we have very serious and comprehensive continuing obligations. Quarterly results must be published, and the principle is that any material information that can affect the share price must be reported. Thank you.
Thank you. BRVM, CEO BRVM.
Thank you, Mrs. Chair. I would like to say that on the tax incentives, I think that is not a sufficient condition to have a company listed. As you see, when the companies come in the market on only the incentive basis, they require the delisting about 3 to 5 years. What is important, in my point of view, is to have our African companies have a long-term project and use the capital market to raise money and create value. That is, in my point of view, very important than these incentives we can give them for the short term. For the research, I think that is very important for our market to have research papers on the companies. What we are doing in West Africa is to have some brokers in our market develop this activity in the short term for big companies and get the information available particularly in English, because we have this handicap to have information in French. And I think that international investor would like to have the information in our companies in English.
Thank you.
My comments.
Alban.
Thank you, Chair. In terms of research, if I just start with research, like any other country, yes, we are not as research focused as we should be, but we have got a combination of brokers who deal with international brokers, and they work together in terms of having research papers. And one of the major players is actually here. They've actually shown your papers on your tables, who works with us in terms of research. That's what I can say on research. But also, asset managers in Zimbabwe are actually building a portfolio in terms of research skills. In terms of incentives, there are no direct incentives to list on the stock exchange. It's something which we are looking at in terms of liaising with government. But last week, I was at a presentation where Egypt was presenting, Egypt Stock Exchange, that they had listings, they could get incentives in terms of tax at some stage. But what they realized is that a lot of companies would then list for just incentives and then do nothing. I think what my colleague has said is we need to actually make sure that we're attractive as a stock exchange, that people list not because they want to get incentives, but because they want to make sure that they are seen, their profile is higher, and they're keen to be on the stock exchange. I think that must be our thrust. Create a platform for stock exchange or for companies which would want to be a brand in the world. So that's what we are focusing on. In terms of liquidity, in Africa, we are about the 7th in terms of liquidity if you compare it in terms of our turnover versus market capitalization. So we are still way below where we should be. I think in terms of liquidity, the JSE is the most liquid, and we would want to aim for something like that. But in terms of companies, the listed companies, 75% of our turnover is within the first 10 companies, which makes it a bit difficult for investors. Would want to expand that in terms of the number of companies which are active on the stock market.
Thank you. I know we're running out of time, but I was also asked to talk about Nigeria. Before I do that and then close our panel, I'd like to say that last week, the International Organization of Securities Commissions, which is the worldwide body of regulators, met in Luxembourg, and I sit on the board. And what fascinated me is that some of the issues that the distinguished panel have talked about and you have raised were some of the issues that we talked about in Luxembourg. From my perspective, capital markets are key for raising medium to long-term financing. And I remember being on a panel on growth and emerging markets and talked about the huge infrastructure requirements, talked about the need for companies to come to markets. And at the end of that panel, a number of the people from Europe basically said, but we're facing exactly the same issue. So fundamentally, market-based financing is competing very vigorously with banking finance. And I think with the requirements that have been placed on banks around the world, there's a lot more emphasis today on market-based finance. However, I think what the markets and public markets provide is really beyond finance, is greater transparency and accountability and visibility, particularly on emerging markets, like the panel that you've heard from. But for me, most important is broadening economic access. Some of the social and political issues that we're dealing with around the world, a lot of it is very much driven by the fact that a number of people in countries don't feel that they're able to share in the wealth of those countries. And I believe capital markets and equity markets and exchanges help in that regard. And so raising money, governance issues, and broadening economic access, for me, are the three issues, whichever market that you look at. Nigeria. We have, usually I sit in a room with the New York Stock Exchange and where people are saying, well, our market cap is $16 trillion, and I'm feeling very, very small. Today I'm feeling a bit very large for Nigeria. Because, the market cap for Nigeria, if you put equities and bonds together, is $112 billion. As of yesterday, our equity markets were totaled about $72 billion. It's a market that has huge potential. We feel very strongly about still being on the path to joining the $1 trillion club in a very short time, because a number of companies that we believe should be listed on the Nigerian Stock Exchange are not yet listed. Some of the most successful companies in Nigeria today are telecom companies, and they're not yet listed. We have a program both to encourage them and to persuade them to list. We believe in the not so distant future, the MTNs, Glos, Etisalat will list on the Nigerian Stock Exchange. Our president has been himself leading a transformation of the power sector. And one aspect of that transformation is really moving the power sector to private hands. And about a month ago, about 3 weeks ago, the power generation and distribution companies, 17 of them, were transferred to very capable private sector hands. And one of the agreements that we've been working on with them is that in the not so distant future, those power companies will list on the Nigerian Stock Exchange. We have an agriculture revolution going on in Nigeria. We have some of the best performing companies on the Nigerian Stock Exchange being agro-based businesses. So what we're seeing is a number of new ones that are being created, some that are doing well but not listed, who we expect will also list in the not so distant future. So we think that over the next 2 or 3 years, over the next 3 to 5 years, by 2016, we will have a market that is a $1 trillion market, equities, bonds, ETFs, and others. The exchange has done great work in transforming itself. The comment that was made about a common passport harmonization of rules across West Africa is something that we're very much a part of. Indeed, by the end of this month or early next month, we'll be launching a new trading platform, which we believe will be the gateway into Africa. We already have a very good trading platform. I think the region recognizes the size of Nigeria, and we're looking at a partnership that works both for other markets as well as for Nigeria. But that trading platform, which is being provided by NASDAQ, will certainly move us to another league, and we hope that we can support the other exchanges in the region through the implementation of that particular platform. But also fascinating for us as a regulator is that we, this year, have already launched an unlisted market called the NASD market for unlisted securities, because we do have a number of securities that are sponsored by public companies, but that are unlisted. And for us as a regulator, as a regulatory haven, because essentially the broker-dealers came together and said that there's this group of companies who can come under the regulatory purview of the SEC. We similarly have an over-the-counter bond market that was transferred to, that is also one that will be launched on the 7th of November. Like the other colleagues on the panel, we have revamped our alternative securities market. I think everyone recognizes that small and medium-scale enterprises are really the engine of creating jobs and resolving some of the challenges that we face, social challenges. And so there is a revamp of the alternative securities market. I do want to say also, I know that we're running a few minutes behind schedule, to say that one of the things that has inspired our markets is the reform of our pension sector. Over the recent past, our pension sector has been growing by about 30%. Today we have about $22 billion under management, and they represent a key domestic institutional investor base. And their attitudes and interest in the market, in a sense, also attracts the participation of foreign investors. We have about, today, 50% of the daily value of the trading on our stock market actually comes from foreign investors, and 50% comes from domestic investors. On liquidity, I just want to say that since we started market making in September last year, liquidity on the Nigerian stock market has grown significantly. And so for others who are looking at ways to enhance liquidity, I think having a very strong market making environment is critical. But partnering that with introducing instruments like securities lending, like short selling, also supports these market makers in the work that they do. And finally, on your comment about private equity venture capital, in Nigeria, we believe this is absolutely essential, that you need an ecosystem that prepares companies to come on the stock market. And if you prepare them well through the participation of VC and PE firms, then when they get on the stock market, they can meet your requirements and you don't need to delist them. But Africa is doing really, really well. I think three or four or five, if you include North Africa, of the top performing markets today are actually in Africa, and they've been consistent. They performed well in 2012, they've performed well year to date, and my view is that they'll continue to perform well. And part of it is what most African countries started 20 years ago, which is to ensure that there's macroeconomic stability. And I think that's the key. And part of what we need to see is people participate, join the African countries in participating in this success. I will, on a final note, I'll just say that what the stock markets provide and the capital markets provide for investors in general, it's a way to participate in the success that we're seeing in Africa. Public markets, people are challenging public markets, crowdfunding around the world. But in Africa, for people who are not as familiar with some of the investment opportunities, it's a way to start looking at the great opportunities that Africa has to offer. Thank you.
Doing business in Africa, you can't afford to be without Africa Investor.